Good morning, everyone. Welcome to Morning Markets on Wednesday, the 11th of March. A couple of things that we've been discussing this morning on our morning meeting. The first of which is the continued volatility in markets, and by markets I mean across equity, bond and commodity markets over the past few days. That's continued to be seen overnight, particularly in the US, where we saw the US open up very strongly yesterday. It then traded slightly weaker and then closed stronger into the close. So that's just an indication of the volatility that we're seeing, and that was a plus 4% to 0% to plus 4% in the space of one trading day. So that's the magnitude of the volatility of the markets markets are dealing with at this point in time. Why is that? It continues to be the factors that we've been touching on over the past number of weeks, the impact of the coronavirus being more widespread globally and the implications that has for economic growth, but also the uncertainty that is in the oil market at this point in time. So we're still continuing to see volatility in oil prices. Oil prices moved up 11% yesterday after, as I know Chris talked about earlier in the week, they had a significant fall post the decision by OPEC and Russia not to move forward with a production cut. I think the other thing that has come this morning ahead of the Chancellor making his first budget speech this afternoon is an interest rate reduction by the MPC of 50 basis points, taking the UK base rate from 75 basis points, 0.75%, to 25 basis points, 0.25%. A cut was expected from the Bank of England at their meeting towards the end of the month. Like the Fed, they have moved ahead of that by reducing rates this morning by 50 basis points. I think the other thing to note from the statement that the MPC have put out this morning is around the increased lending facilities, a term lending facility that they're putting into place for SME businesses, which is in the tune of approximately £100 billion, which will be released into SME businesses via banks at or close to base rate over the coming months as that becomes drawn down. And in addition to that, we have seen a reduction in the counter-cyclical capital buffer that banks have had to build. What does that mean? In good times, banks have to set aside additional capital. That's been released and taken down to zero today, which will allow banks to lend more money into the economy. Taken together, those two changes should potentially release up to £290 billion worth of additional capital into the lending market, which again is supportive of the economy at this point in time as we navigate our way through the challenge that the coronavirus is presenting. In addition, we'll hear from the Chancellor today with his first budget this afternoon. There are two things that we'll need to see from that. One, how the Chancellor and the government is going to provide additional support to the economy through this difficult phase of dealing with the coronavirus, but then also how they're going to deliver on the longer term objectives that are really important for the medium to longer term growth of the UK economy. And by that I mean the infrastructure spend that we need to see being delivered as was set out at the time of the election. We'll have an additional video today to discuss the outcome of the budget, and we'll release that later this afternoon, and hope to see you for that later on today. Thanks.